on Wall Street, top investors watching your money. Joining me right now is Price Futures Group Senior Market Analyst and Fox Business Contributor Phil Flynn, Bulltick Capital Markets Chief Strategist Kathryn Rooney Vera, and Michael Lee Strategy Founder Michael Lee. Great to see everybody this morning. Thank you so much for being here. Everything you're saying is the sentiment that I've been hearing all weekend from market sources, saying that this is way overdone, coordinated, and yet business is doing well, Kathryn. Look at all these buyouts. Clear Lake Capital announcing a deal to acquire Quest Software from San Francisco Partners, and yet another private equity buyout. Dealogic tells us that private equity firms have announced $944.4 billion worth of buyouts in 2021 so far. This is 2.5 times the volume compared to last year. Kathryn, when you see this kind of deal making, that's a positive for markets, right?
Sure, it's a positive for markets, and it's nothing better than more than a decade of close to zero interest rates and record high stock prices to get those hundreds of billions of dollars, Maria, flowing into private equity firms. Look, it's really just institutions looking for yield. At the end of the day, when you have treasury yields so low, interest rates so low, stock prices already massively record highs, really overvalued across the world, you get a lot of money looking for a home. And that's what pension funds and hedge funds and life insurance companies are doing. We've seen billions of dollars flow into not only private equity funds, but even IPOs are doing phenomenally well. We've heard a merger volume out of last year in IPOs. And really, I think that what this comes down to is when does the Fed move rates higher? When does the party, end? I think we have some space yet for that to run through. So probably the next 6 to 10 months is going to be risk on. The party's still going on in private equity. But as I've been saying on your show, Maria, it's important that investors hedge themselves for that time when rates do go higher. Inflation does prove itself to be longer in longevity than the market has priced in, and really markets start to get a little more risk averse. So yes, things are going great, phenomenal for markets. I think there's an expiration date.
So what do you think are going to be the real pressures then? A change from the Fed, Kathryn, or is it more stimulus from the federal government, interest rates going higher? When are your caution signs going up?
My caution signs go up when you see consumer confidence drop. That's a leading indicator on consumption, which is more than 2/3 of the U.S. economy. So at some point, Maria, you do get inflation biting into purchasing power of the U.S. consumer, which, as I said, is the main driver of the U.S. economy. So if the Fed lets inflation run and it's beyond their capacity to restrain it or rein it in going forward, then you do see brakes put on that main engine of growth. So there could, in my view, be a Fed policy mistake in the offing. And that, for me, is the biggest risk. Historically, what we've seen, the economic cycle turn from trough to peak or peak to trough, in this case, peak to trough, that inflection point happens as a result of monetary policy error. So we have the spigots on from the federal government in terms of spending, trillions upon trillions upon trillions, at the same time that we have massively expansionary monetary policy. Regardless of the tapering, it's still expansionary.
All right, we will leave it there. Great to see you all. Thanks very much. Great analysis, Kathryn. Thank you. Phil Flynn, Kathryn Rooney Vera, and Michael Lee. So appreciate your time this morning. Great analysis from all of you. We